Okay, so this one is June 2009. So have a read the question. And the first thing to spot, remember, is always the date. The year ended 30th of April 2009. Standards began 1st of May 2008. So you can do that opening. And anything to do within a year, so anything up to 2010, would be current, so current assets, current liabilities. So I'll look at the information they're given. They give us the sales figure. They give us the gross profit. So that means if we do an income statement, we don't need to start right from the top. And they give us some other totals. So the first thing to do is go through and write if it will be income statement or soft. And maybe put if it's an asset, income, expense, liability. So bank loan, repayable December 2009. Well, that will go on the soft. And that's going to be current liability. Bank overdraft, again, soft and current liability. Capital, 1st of May, so that's the opening capital, so that's the soft, that's the capital section. Discount allowed, that's the income statement, that'll be an expense. Drawings, again, soft, and the capital section. General expenses, income statement, and the expense section. Mortgage on premises, well, a mortgage is a liability and it's a non-current liability, so the soft. Motor expenses, income statement and expenses. Motor vehicles at cost, well, that goes in the soft because it's a non-current asset. And the same for provision for depreciation. Premises at cost, again, soft and non-current asset. Rent and rates, income statement and expense. Stock, which is inventory, at 30th of April 2009. So that's our closing inventory. So that goes on the income statement, the trading section. And it also goes on the soft as a current asset. Trade creditors, that means payables, which is on the soft, and it's a current liability. And debtors means receivables, which goes on the soft as a current asset. Now we're given some information down here. So check for £2,000 for drawings has not yet been recorded in the books of accounts. So check for £2,000 for drawings. That means they've taken £2,000 out. So on a bank overdraft, we're going to have to add an extra £2,000. And on drawings, again, we're going to have to add an extra £2,000. Rent paid in advance at 30th April 2009 amount to 1,340. So it's a prepayment. So for rent, where was rent, we're going to have to take away that amount, and that's going to give us an other receivable. So 1,340. General expenses of 400 remain unpaid at 30th of April 2009, which is an accrual. So general expenses, we need to add that on because it should have been paid, and that's going to be an other payable. And motor vehicles are to be depreciated at 20% per annum using a straight line method. So straight line method means we do 20% of the cost. So motor vehicles, 20% of the cost. So 20% times 16,400. 400 gives us 3,280. So that's this year's depreciation. And that also gets added on to our provision for depreciation. Okay, and then in part A, it's asking us to prepare profit and loss account for Abdul. So a profit and loss account is just the second part of an income statement, the bit from the gross profit onwards. So we would set out the headings. So Abdul Miraz extract of income statement for year ended 30 April 2009. And now I'm only going to need £2 symbols because the 3 I use for the trading section, which we're doing. And we're going to start with the gross profit, which was 76,510. Now we're going to add on any income, but there was no income that we saw. So we're just going to take away the expenses. Well, we have first expense was discount allowed, which was 310. Then we had general expenses, which I need to add 400 onto, so that was 12,820. Then we had motor expenses, which was 18,730. Then we had rent and rates, which we needed to take away at 1,340, which gives us 23,360. And then that was it on this list, but we also had depreciation at the bottom, which was 3,280. So add all that up. And that gives us 5,8,520. Take that away from the gross profit. Then we get 17,990, which is our profit for the year. Doesn't go on the line, and that's the first bit done. Just double check the answers, and I can't read my own handwriting. That more direct expenses should be in the 30, and I read it as a 5. That means that should be £20 less, and that should be £20 more. So profit for the year should be 13 or 10. Okay, then the next bit is doing balance sheets. Remember that means it's soft, so we get all the information we need. So give us the title. So I'm just going to do our £3. We're going to start with non-current assets. And we have for non-current assets, we want to level that cost, provision for depreciation, and net book value. And we have for motor vehicle, we have 16,400. Let me get the better one. This one. For the depreciation, we have 328, add 328, which is 6,560. So it takes away from the 6,400, and we get the net value of 9,840. Premises was 95,000 costs, and not depreciated, so it's still 95,000. So total it up, 104,840. That's just that, and that one. $111,400. Finish with these two numbers. I'm still going to use that number. Okay, then comes next is the current assets. Current assets, but inventory first, which was given the list. So it was 24,050. Then our trade receivables, which was 8,790. Then our other receivables, which was our prepayment of expense, which was 1,340. Total that up, and we get 34,980. Then put it in the wrong column, won't I? and then total that up with the other one, and we get total assets of 139,820. Okay, then we do capital section. Our opening capital was 71,500. There was no other kind of capital introduced, so we just have to add our profit for the year, which was £18,010. And we take away the drawings, which we still need to add the £2,000 to, so it's 18,180. Work that out, and we get 71,320. Then we have our non-current liabilities, which is one is just the mortgage, which was £37,500. Then we have our current liabilities, which we have was our trade payables, which was 11,060. We have our other payables in our room here, which was 400. That was our accrual. We also have our bank overdraft, which was 14,630, and we also have our bank loan, which was 4,100. Add that up, and we get 30,990. Total these three together, and we get 139,820. There we go. So it does balance. That's our total capital and liabilities. And again, how many marks was that? 12, 34 marks. Easy 34 marks.